All right, ladies and gentlemen, welcome to DAO Talk today. On interview number 29, I believe, we have Nick from Gauntlet Network. Nick, thanks for joining us on DAO Talk.
Hello.
Yeah, so why don't you give us a little bit of intro, who you are, what you're working on, and then we can kind of dive into, some more in-depth details about your projects and things going on in your world.
Yeah, as you mentioned, Nick Cannon, VP Growth at Gauntlet. I've been here about 2 years now, and we're deep in the DAOs. You'll see us in the forums, trying to help these projects understand risk and manage it effectively.
Awesome. So what got you into this space? Let's talk about you for a little bit, and then we'll dive into Gauntlet and how it's working. But did you start with Gauntlet? You said 2 years ago, or were you in the space before then? Give us your background.
Before the last crypto winter, the 2019 one, I was at a DeFi startup called Lockboard. We were the first relayer for Dharma, integrated Compound as it started to come along, Maker, CDPs when they were just single collateral DAI. Uniswap was just popping up around there. So you could sort of cover the space, or you could play and toy around the whole space back then. That winter sort of killed that project, but I knew I wanted to come back and have been reading a lot of the research that Gauntlet still produces to keep up to speed, and knew I wanted to come back, and had a fortunate opportunity to do it post just after DeFi summer, and timed it pretty good even in last year. And I think we have a long way to go and a lot of things to build. So still excited to be here.
Awesome. Yeah. So kind of talk about Gauntlet. What is it? What does it do? What do you all do? I would say start on a very basic level for, maybe the uninitiated in the DAO world. You don't have to explain what DAOs are. I think that's, kind of assumed if you're listening to this podcast, but, start, at the base level, and then we can kind of dive into the weeds if we want to go there.
I think everyone understands the terminology risk management, or at least knows the terminology risk management. But what does that mean in the context of DAOs? In traditional finance, where Tarun and Ray, sort of the co-founders, come from, you sit on a risk desk. The hedge fund has various positions and exposure across different asset classes and of course, different positions. And you need that big red button to make sure, hey, if a tail risk comes along, we can pull the ripcord and we understand sort of what tail events could cause, as maybe we've seen today. We're recording when FTX has been potentially acquired by Binance. Could put a position or a protocol or a whole desk into insolvency where they can't recover. Porting over those learnings into DeFi is a bit interesting because everything's open and transparent. There's obviously numerous different attack vectors, and composability, while offering a lot of opportunity, presents way more risks, right? Bridged assets, super fluid collateral, as some might say. And what Gauntlet focuses on is risk management primarily. That's sort of the flagship product. You'll see us servicing the big DAOs like Aera and Compound, the lending markets primarily, to tune those parameters to make sure as they do add new collateral assets or go onto new networks, they're optimizing for risk-adjusted capital efficiency as they try to grow and develop the protocol.
So what would you say is the biggest challenge that faces Gauntlet right now, or what is the biggest what is your main focus in the world right now, in the DAO world?
In the DAO world, I say risk management, but the component that we've been focused on in the past year or two primarily is tuning parameters. You'll see us on Tally, and the governance proposals that we put up are, hey, change this collateral factor of this LTV from 70 to 75% or a few percent up and down. And there's a lot of efficiency gains, especially at the scale some of these DAOs have got. But that's only one component, really, of risk management. And recently we announced Aera Finance, which is a product we built and actually a protocol on-chain. Gauntlet runs all our simulations and financial models off-chain in the cloud. They're expensive enough as it is in AWS and Google Cloud, let alone no attempt to try to do that on-chain for gas purposes and other reasons. But the treasury management piece, which is sort of what Aera is trying to service, is a way to hedge that loan book and cover those insolvencies should tail risk occur, and that will complement the flagship product that we built and have been servicing these DAOs with to improve that capital efficiency, sort of twofold.
So yeah, before we jump into Aera, you're VP of growth. So what would you say is your main focus in regards to, growing the network of Gauntlet Network? And you say you work with primarily, those large DAO protocols, Aave, Uniswap, et cetera. Are you seeing more of a demand with like some smaller DAOs, or is it still kind of servicing the larger DAOs? And then if are DAOs reaching out to y'all? Are you reaching out to DAOs? Is it a lot of biz dev, et cetera, et cetera? What would you say?
Both ways, definitely. And we talk about the DAOs that we're servicing, but we service projects that want to be DAOs, right? They raised a round, or they're a small team, they have some funding. They want to build sort of not in open at the beginning, but there's always the intention of, hey, how can we decentralize this protocol? And we always want to say, like, where are you at on the spectrum? And when are you going to get to the compound, the Uniswap stage where everything is sort of governance, executable payloads, and similar. So, we work with a lot of smaller projects, and sometimes that's easier from the start, right? You can move quicker, iterate quicker, less exposure, and decentralized consensus is hard. I mean, there's some very obvious benefits, I think, that we all know, but getting consensus, especially for when you're trying to have rapid product development and there's sort of mission critical funds on the line, it slows things down, and especially early protocols in sort of an earlier life cycle don't want to be limited by that, and that sort of makes sense. I think everyone can understand that.
Yeah, I mean, especially today, I think it's like today, like actually today, like you mentioned with the FTX fiasco, and I think a lot of the headlines are around like DAOs in the DAO space, are usually like around hacks or negative things and like a disregard for risk management. So I think it's important and exciting to talk to people like you who are making like active change to like playing an active role in changing that. Like, are you seeing a lot of like when you work day to day? Do a lot of these people like are you having to like kind of explain to them why to care about risk management, or is that kind of already baked in and they just need help, in regards to changing parameters, how do we operate this, et cetera?
It's getting better, but there is a lot of education that we need to do. Mainly because like this spectrum of users or personas, as you could say, are like extremely broad in DAOs today, right? You have like the retail anon crowd, which may be just a casual user of a protocol, but not actually a governed token holder or voter, but they are a user and they have needs and they have like a purpose of being there. Then you have like sort of the core development team or decentralized or more now decentralized development community. And then on the other side, like all the whales, like the VCs, the large investors that have tens of millions of dollars in tokens or equity. And they all have like sort of different needs and different understandings of risk management and definitely time horizons of how they sort of think about it. So, educating across that and making sure the value proposition of risk management is sort of clear is pretty tough to do. It's not exactly apples to apples for revenue. And I think that's what a lot of people want when they sort of try to map it to our service fee, saying like, how much revenue of capital efficiency did Gauntlet drive? And I'm like, it's tough to drive capital efficiency when the market's going down, right? We should be in a risk off environment. We should be increasing collateral requirements. So again, things don't blow up. And so trying to tell a story, but also making it make sense for a broad number of people is a big burden or a big lift.
Yeah, that's hard to sell to people who are, just solely focused on revenue, but I can understand, especially from our perspective, because all we do is talk about DAOs all day. Like, it's super important to do it right, even if you can't really see the like bottom line until, a couple of years down the line, but super important. All right. So you mentioned Aera Finance, the first autonomous data-driven treasury management protocol directly from the Aera Finance Twitter bio. Can you give us a little bit more of a breakdown about what Aera is and, what that kind of arose from?
The problem we currently have right now is, and what you see in these lending protocols, is the safety module or the insurance fund or whatever's backstopping potential tail risk of something terrible happening in these over-collateralized lending protocols is that they're largely denominated in their native governance token. It's Compound, it's Aave, it's similar, it's Mango, right? And those assets are highly correlated to the success of the protocol and the liabilities they have. So if the protocol sees a downward spiral and there's liquidation cascades, the governance token, which is largely backing those and they're supposed to ensure and stop that, goes down as well at the same time. So how do you have a fund that is anti-correlated with your liabilities? And this is extremely important when you sort of say it out loud, but tough to do in decentralized consensus and getting governance. How do you convince people to diversify out of their treasury or their insurance fund by voting with that same token, which is going to put downward pressure on the actual price, and that's pretty tough to do, especially in an environment or when you're doing it reactively. There's sort of a lot of hurdles to get over there in the forum and Discord and otherwise.
So as a lot of the launch, I mean, what you guys launched a couple weeks ago, correct?
Yeah.
So
not too long.
So has a lot of the post-launch work been around just like talking in forums, getting people to understand what Aera is and why to adopt it, or has there been a lot of general understanding?
A lot of the reason we launched was, hey, it's tough to get anons to sign NDAs. We want to be open and transparent about what we're doing. We're still in alpha right now and have an existing vault that we're getting a lot of good info, and we'll have a good impact study going forward. But we want to help out our initial clients and our initial DAOs, and going into Q1, we'll try to onboard more of them. But yeah, there's a ton of interest in. It's not just the DAOs that we're trying to service, right? There's different. So I guess I should mention there's 3 different roles in Aera: the DAO, or like the client protocol, the arbitrageur, who's going to rebalance the weights, and then the vault guardian, which is submitting parameters to optimize for that objective function, which is dictated by the DAO. Like, hey, it's pretty simple generally in like a lending protocol's case. We have these liabilities, these borrows. How can we make sure we cover this loan book completely? And the vault guardian submits weights and then is incentivized by rewards or slashed if they're incorrect. And there's a reputation system and a lot of complex math in the 80-page white paper. But we want to talk to these people and people that are interested in participating in that role, in that function.
Maybe shifting gears a little bit, but kind of talking around the same line. Like, what do you see as the biggest challenge facing DAOs moving forward in terms of long-term viability? Not just for on-chain big protocol DAOs, but just DAOs in general.
Yeah, I think conflicts of interest are really tough to get over. Right? Gauntlet works for various DAOs. Hopefully we're as transparent as possible. We have investors that have stakes in some of the DAOs we work with, and they're obviously some of the biggest voters as well. I think that starts to get pretty murky pretty quickly when there's different interest, and this B2DAO sort of service layer, including us and others, start to work with a variety of DAOs. And I mentioned like composability before, but like that starts to make the web of complexity and sort of the stated interest of a proposal or forum thread or something like that not become crystal clear always. And who's going to, I don't want to say watchdog or regulate that, but make sure to manage those expectations and educate the community without wagging the finger and calling someone out for putting in a nefarious proposal or a parasitic proposal, as some might say, through a forum and try to push through a vote.
Sweet. What would you say is your favorite part about, working in DAOs? I think, a lot of times, especially because, we're going through a lot of like growing pains now, we talk about a lot of the negatives or the complaints about, being in the DAO Twitter, DAO ecosystem. What's your favorite part?
It's adversarial, but it's not zero sum. For a little context, I played poker professionally for like over a decade. And at the end of the day, as much as you can try to squint pretty hard, but poker seems pretty zero sum. If I win, you probably lose. Maybe we get some entertainment along the way. And while DeFi might seem like that right now, called the casino and things like that, the sort of the game theory and adversarial nature is definitely related. But in the end, in my mind, there's almost no chance it looks like a casino. It'll be boring. It'll be like email, and these underlying protocols, if operating correctly, will be able to transfer value and onboard a ton of users. And not necessarily, we don't have to be completely idealistic that it's like banking the unbanked or something, but these protocols are going to open up a lot of use cases that I don't think we exactly foresee just yet. Poker sort of saw a dead end because all the learnings from ML and AI were ported over to DeepMind and then taken to other industries, right, for ads or something like that. In crypto, it's sort of unbounded, where like the learnings about governance or composability can sort of immediately be directly applied to ongoing development cycles and different layers in the stack. And that's pretty exciting.
Yeah, I think we talk a little bit about like the headline nature of crypto and everything, but the reason I like working in the DAOs and DAO space and talking to a lot of DAO operators who don't necessarily get a lot of like love or followers on Twitter, just because, you know, like you said, it is kind of boring, but boring is also good. And there's a lot of really awesome things happening behind the scenes. But like you said, I think it's unbound. And there's going to be a lot of really interesting, cool things that arise in the next couple of years, even though, you know, it is a very like downtime right now. So I'm excited to see that. And I'm excited to talk about that and move forward. So what would you say, if you could change one thing about DAOs or just Web3 in general, what would it be?
It's almost like they should move faster in certain regards and move slower in others, giving latitude to people that are directly correlated or have KPIs that track towards the DAO. I think there's like a large trend towards sub DAOs and councils and committees that sort of are trying to, or intuitively are trying to do this, right? To have a risk DAO or have a treasury DAO or some sort of grants DAO, for example, and that's sort of been the most successful one. But we don't necessarily always need a middle layer that could potentially turn into bureaucracy just yet. I think we can have incentives and KPIs and incentive alignment directly to the DAOs, and people like us and definitely a ton of others can service the DAOs and be accountable to the community, which is changing all the time on an ongoing basis and in a transparent manner, which I think is going to be pretty exciting.
Something we're talking about a lot recently is just the importance of being on chain. And you talked about Gauntlet, does a lot of their stuff off chain. Aera's doing things on chain, and there's not necessarily, there's pros and cons to both per se. But something we've been talking about a lot recently on DAO Talk is just building on chain and being open and just transparent almost, and building, like our CEO Dennison tweeted today around the FTX fiasco, like, why don't we just use the technology that this entire industry is built on? So, what are your thoughts around? It's kind of like an open-ended question, just about like the importance of the on-chain technology and like why it is so important to use it, and even sometimes when it feels cumbersome in a way.
This is 100% the North Star for growth and like the function I'm trying to lead, where, hey, we're in these communities and we want to explain as much as possible, even for, we understand the audience isn't quants that have 20 years of TradFi experience or something like that. How can we port over all the data and the holistic view of our methodologies and inputs to make it clear what the value or risk of the protocol is? Like, how can we get better about displaying this in dashboards? Will there be technology in the future so we can roll this up into ZK proofs and show that this is our calculation, while still having a business model that does have some proprietary aspects, right? And this is something we want to get closer to, quote unquote, get closer to the metal, get closer to the protocol of transparency and try to be more accessible. We get that a lot of our research can sometimes be very obtruse or not digestible for the broader general user or even the core developer, and that's definitely something we need to get better about, because the ethos is something we try to ingest or ingest, because I'm talking about data pipelines all day, but something we want to lean into more and more, and definitely a North Star.
Coming from my end, being more on the marketing and content side, it's how do you make the technical more digestible and more consumable for the average person? And I don't think the answer is diluting the research paper. I think having that complicated, hard to digest research and work that y'all and other projects that you are doing is important. And we just need more people, more communicators, more creators in the space who are helping bridge that gap between both. That's why I love working for Tally. And I think, Dennison's kind of all of that wrapped into one. So exciting to see how that plays out in the next couple of years. And it's important to have people like you as well, kind of that middleman. But all right, cool. So let's end on a quick little personal question. What is your favorite place in the world and why? We've had all ranges of answers, from people saying the room they're in right now, their home, to their hometown, some beach somewhere. So feel free to get as crazy or as simple as you want to get here.
Been to about 45 countries, and probably like most people, I want to pull out 5 to 10% of that culture or that city to sort of live or have access to forever. the lifestyle of Copenhagen, the soups of Vietnam, the arts and culture of Mexico City. I don't particularly want to live anywhere like in the metaverse per se, more than I sort of do right now. But if I can find a way to touch grass in sort of all those places and be more mentioned, then sign me up as soon as possible.
That's probably my favorite answer I've had so far. That's a really, really good answer, and I think I agree with that. I think that's how I'm going to answer the question if someone asks me. But 45 countries, that's a good little bit. Do you still travel a lot, or is that past times or what? You still traveling?
Past times, a little bit of as mentioned, the poker life. But there's crypto conferences everywhere. I can do a few here and there.
Yeah, for sure. All right, so let's talk. Let's end on a little bit of like how can people get involved with what you're working on? What are the opportunities? Is it just staying plugged in? If they have a project they want to, if they want to use Aera, if they want to work with Gauntlet, how could they get involved with you?
Yeah, you can find us in the forums of a lot of these projects. That's usually the easiest way. Tell us what we're not explaining well enough. Of course, we're hiring like anybody, as you can imagine. When in good times or bad, risk management is starting to be more top of mind for crypto, which net on net is good. We don't want to be the risk managers for everyone, but we want to service as many as possible. So this sector that we're trying to build in grows, and we need more people to help us do that.
Absolutely. Where you guys are at Gauntlet Network on Twitter, I believe, and then at Aera Finance. Aera is AERA. Where did that name come from, by the way?
It's a Latin and Roman word for public treasury. As you can imagine, all these treasuries are quite public, and we're trying to manage them a little better than they are today.
Love that. That's a great name. So at Gauntlet Network, at Aera Finance, and Nick is at Inky Maze, INKYMAZE. Where did that name come from?
That comes from Pale Fire in Vladimir Nabokov's book.
I've heard of it. I'm not super familiar, though. I need to read that. I like the name, though, for sure. Well, Nick Cannon, thank you for joining DAO Talk Studios for this episode of DAO Talk Interviews. I'm sure we will be in contact more in the future. As always, if you're listening to this and want to get a more in-depth consumption of this, go subscribe to the DAO Talk newsletter at daotalk.substack. Go follow Nick at Inky Maze, Gauntlet Network, and Aera Finance, and we'll see you next time. Thanks for coming on.